This is Waste to Wealth, a podcast about turning your waste hauling business into a profitable, scalable, cash flowing machine. And now, here's your host, Michael McCall.
Hey, Toby, it's great to see you today. Welcome to the show. So you actually, do you have a show as well? I guess I was going to ask that before.
No, I don't. I probably should, but I actually do not. What I should do is create a series of content that just help people get started with insurance,
Yeah.
especially for a lot of the commercial insurance clients that we help, and they're, frequently asked questions.
Mm-hmm.
I think I should just do a cut up. I haven't done it yet.
Yeah.
And I don't do a routine podcast where I'm interviewing other people, but I probably should.
That's okay. That's okay. You're here now. So this is
Yeah.
Waste to Wealth, where we talk primarily about what waste haulers care about. So junk removal companies, dumpster rental, and trash haulers. And so you're with Wisdom Insurance, and you primarily do insurance for these types of companies, right? You said that a lot of the people you help are in that industry.
Yeah, we started in 2013, and in 2015 we got connected to a franchise, and we wrote a buddy of mine bought a franchise and of a junk removal franchise, and we wrote that, and then within like 3 months, word of mouth spread, and we wrote 10 more, and
Oh,
then
wow.
within a year we had written like 50 or 60. And so then it was like, oh, well, we could really do well because the local broker tends to really struggle with getting options and understanding the industry, and what the questions that they're asking don't necessarily make sense all the time.
Mm-hmm.
And so what we were able to do is figure out in different marketplaces throughout the country exactly who to go to, how to classify the business, what to call it. And so our junk removal book just started to grow organically through word of mouth referrals. And that continued from 2015, 16, 17, 18, really into 19. And around 2019 is when we decided to go nationwide with it. We said, well, we're helping all these different franchisees of this one franchise. What if we expanded this to other franchises? And we opened it up to the independent channel, and we started helping really the little guys. And today, that makes up a huge majority of our book of business. Probably 70 to 80% of it is the guy with 1 to 5 trucks who's out there fighting for his life. His local guy can't come up with options, and they, or they're incorrectly classifying, so that could be a nightmare. And so we just said, hey, if we get really, really good at this one thing, then we'll be able to help a lot more people as a result of kind of being specialists. So
Right.
we then really expanded a ton once we started writing dumpster rental as well. So we really started in junk removal, and from 2015 to 2026, our book of business in junk removal equals our book of business in dumpster rental, but we only started writing dumpster rental in like 2020, 2021. So that book has grown almost twice as fast as our junk removal book over the last 6 years.
Bless you. Wow.
Yeah, sorry about that.
That's pretty amazing, but that makes sense to specialize because they have really specific needs. And I went through this with insurance agents. They quote you the wrong stuff, and there's so many different things to quote. I don't even know how many different policies you have to write on somebody, but between the workers' comp and the pollution, the trucks, the DOT regulations, like there's so many ways to get hung up. And you probably source specific carriers that other companies don't have access to or don't even know about, right?
Yeah, that's the issue is we know exactly whether you're in Florida or you're in Texas or you're in Oklahoma or Connecticut or it doesn't matter. We know exactly who to go to, what the options are available in that marketplace, and we're and how to classify it with each carrier because one carrier is going to call it garbage removal. Another carrier is going to call it trash removal. Another carrier is going to call it debris removal. And so, which carrier you're going to and how you're classifying it. Back in the day, everything used to go under janitorial, and Liberty Mutual used to write everybody. And then eventually the marketplace shifted and they got out of it completely,
Hmm.
shut it down completely. And then that's when really kind of Progressive took over. And there was a time frame for a year or two where Progressive was the only option. And then eventually these other carriers have come out of the woodwork. And so we're getting, in most markets, 95% we're getting three or four different options, five different options. So we're able to quote across multiple carriers and deliver the most comprehensive, competitive coverage with the correct price. And there's a difference between startups and companies that have been in business for a while.
Mhm.
The startup guy needs general liability, commercial auto, maybe inland marine if they have a loan on their dumpsters. If they
Yeah.
don't and they choose to self-insure those, that's okay too. And then if they've been in business for a while and they have employees and they've grown and scaled a little bit, then you've got workers' comp, you have commercial umbrella because they're interacting with property managers and contractors and construction companies and public storage facility places that require those higher limits in
Right.
order to get that commercial work. So, commercial work's great. I mean, retail residential's uh, uh, tends to be a little more higher profit revenue wise,
Hmm.
but the getting those commercial accounts and establishing that steady business
Right.
that's always performing there for you, there is the right mix there, whether it's 70-30 or 80-20 or 60-40, depending on your where you're located and what relationships you have. But
Hmm.
our best customers, our most successful customers, figure out that right recipe, and they're able to do both the residential and the commercial.
Right. So I ran a dumpster business and we started when I took over, it was probably like 70 commercial, 30 residential. And then I shifted to like 90 commercial, 10% residential because those commercial ones were way easier to service. And they took up all my capacity because the residential people, they call you once every 3 years, and then they don't do anything right. Everything's special for them. Everything's custom and it's hard to make money. You have to really charge them a lot to make money on that. But
Yeah.
I was just explaining to someone last week that you have to pick your ideal customer and then price the other type of customer so you don't get screwed. So,
Sure.
yep.
Sure.
But the
Yeah.
insurance requirements are definitely different for commercial. So I think I had to go from a $1 million to a $2 million umbrella because of a contract or a broker or some kind of requirement. And it was not that expensive to go to the 2 million because we already had a lot of like the safety features in place that would have kept our rates low. Um,
Sure.
so I was curious about that. Like, what are some of the things people do wrong when they get insurance? I know a lot of guys don't like to put cameras in their trucks for various reasons, either because it's a hassle or because employees balk at it. But that was one thing we did. Some of the things you recommend for people to keep their insurance costs low?
Yeah, so there are some what I would consider to be like industry best practices, right? So that's going to be during your hiring and driver recruitment process, just making sure that you're crossing all your T's and dotting all your I's, and
Hmm.
really doing thorough background checks on individuals. Whether you implement drug screening and, reviewing motor vehicle records, making sure people will say they have a clean record, but do they actually really have a clean record? Because those speeding tickets or at-fault accidents are impacting your overall commercial insurance rates.
Mm-hmm.
And it's some markets, it's just very difficult to find clean drivers.
Oh yeah.
And you could have really hard workers that have accidents and tickets, and you want to put those guys to work. And it makes sense financially, even if it causes a surcharge on your insurance sometimes. But the idea is to maintain, a driver safety program. Implementation of telematics is critical, especially when and if there's an accident. Being
Right.
able to look at the footage and see that your driver is at fault or not. And then that just allows you as a business owner to determine whether you're going to pursue it or not. So
Mm-hmm.
that's super important in my eyes, is having the tracking and the data. Somebody is hard braking, or they're, turning too sharply, taking tight corners, if they're, quick acceleration. I mean, all that data that's captured from the telematics is invaluable to you as a business owner. So when you have that feedback
Yeah.
immediately where you can address that with your drivers, hey, you're going to be able to control that piece of it a lot better than a company that isn't utilizing telematics. So telematics is an absolute no-brainer for me.
Mm-hmm.
Other things and the data shows and supports that from an insurance standpoint, that makes a big difference. So a lot of carriers and companies will offer discounts as a result of you utilizing telematics. So sometimes you have to utilize their telematics system in
Right.
order to capture that discount, but it can be anywhere. We see it anywhere from 5% on up to 20%. So that's a conversation you have to have with your agent and the insurance companies that they're shopping, to see what's available in terms of the telematics discounts. We have a very, very intense, qualified, preferred insurance product that utilizes drug testing on all drivers. Telematics is a must. Participation is a must. Background checks on all drivers. And they, under their guidelines, if you have a speeding violation over 11 miles an hour, that's considered a major violation. And their look back period is way longer than other insurance companies. Some insurance companies only look back 3 or 5 years,
Right.
whereas in the preferred program, they're looking back 7 years.
Oh
So
wow.
it's really intense, but the premiums are much more competitive as a result of, being able to find preferred risks and deliver those types of risk characteristics with like-minded business owners and companies, that ends up delivering that more competitive premium over time. So we have programs like that. It just kind of depends on, what your philosophy is as a business owner. And some guys, they don't want to participate in telematics, and they don't want, to be to have that being tracked on them and their company. And for those you just have to connect them then to the next best option in their marketplace. And that's really what we're getting to consistently over time.
Yeah.
So we're finding those companies, we're first to market with them. Our clients benefit in the long run as a result of us being so aggressive with it, because it really is, the majority of our overall operation is, junk removal, dumpster rental, waste haulers. So yeah, we're able
Yeah.
to consistently deliver competitive
Well, I think
options.
people can get behind the idea. It's the implementation that holds them up, because when you're a startup, every dollar counts. You're probably not making money right away because you've got a lot of debt or a lot of equipment you just bought. And so the idea of getting a driver, like a lot of drivers are going to be gun shy of background checks and drug tests, and then they're also going to be gun shy of the camera. And those, I think you have to be able to attract high quality employees in order to get people that can pass those things or actually are safe drivers. And so they're like, how do you get to that level where you can attract a good employee who's used to those things, is comfortable with those things because they're not breaking any rules? And what I found is when I went from my big thing was offering benefits. Like before I offered benefits to employees, I could not attract talented workers. It wasn't possible. It was just the only people that I could attract were guys that were going job to job to job, and then they screw up, and then you got to let them go. You could find some loyal people, but they were really hard to actually execute. Either they just miss work, or they were clearly there just for the paycheck. Then they wanted to spend all their money on booze on Friday night. You know,
Yeah.
uh,
Yeah.
so it wasn't
Eh,
until I added benefits like health insurance and 401k that I attracted good employees. And those guys were like, yeah, of course we're going to do background checks. Of course you're going to have cameras. Like
right.
those guys wanted cameras in the truck because they knew if there was an incident, that camera was their best friend because it would protect them from getting a ticket when the officer just assumed that the CDL driver or the professional driver is at fault. Because that's my experience. That's who the officer wants to give the ticket to if there's no other like witnesses. So a lot of times the drivers wanted that camera in there and they made sure it was running so that they could pull it. And we had a bunch of funny circumstances. Like we were at the beach, so that's where we operated. And during the summertime, there's all these really bad drivers, right? So one time, we had a car T-bone one of our trucks. It wasn't a big T-bone, but it was they ran into the side of it and they clearly bent the tire. And so our driver pulled over and I don't know how many girls came out of this thing, but there was way too many girls for the car. It was like 10 girls came out of this little car. And he was like, so you hit me and now we've got to call the police. And they started arguing with him. They're like, no, it was your fault. And so he just pulled the camera out and just showed them what happened. And they were completely defeated. And it turned out that the dad came and he was really upset at the daughters because they weren't supposed to be, the wrong person was driving, and he just apologized, and just the camera just took care of everything. Like it just
Yeah.
put it to bed right
Yeah.
away.
Yeah.
So we had no problem with any insurance claims at all because of that. Like we just beat their arguments down pretty fast, and no ticket was issued to us. It was issued to the other driver. So
Yeah, when you have that ability to prove who's at fault and who isn't, and a lot of times too for business owners, they'll back down off of situations when they realize that their driver is at fault,
oh yeah,
right? So they'll
right.
be fighting it and saying, "Oh no, we definitely weren't at fault," and then they get the footage and they see that their driver pulled out or whatever. And so it works in both ways. But when you have the ability to show the claims adjuster that it was not your fault and you avoid that, because that one at fault accident in our industry can result in a 30, 50, 100% increase in your commercial insurance costs. So if you're paying, 30, 40, 50 grand a year,
Mhm.
and now all of a sudden you're talking about a 30% increase, at 50 grand, you're talking about 65,000 instead of 50,000. And now that's going to follow you for 3 to 5 years with your loss runs and your loss history. And
Right.
so it's not just the 15,000 this year, it's the 15,000 next year, it's the 15,000 the year after. So
Mhm.
really that one, even if it's just a minor fender bender, 5 grand, 10 grand, something like that, maintaining the integrity of that not at fault status is critical.
Right.
So if you can avoid that with just one video, boom, clip, it's huge,
Right.
big
Yeah.
impact.
Makes a huge
So
difference. And that's a
yeah,
simple ad. There's lots of ways to get cameras in there. And like you said, telematics
yeah,
is a perfect solution because it plugs
yeah.
right into your
And going back to your point too, like we really help people try to crawl before they run, I call it. So
yeah.
the starter package of insurance doesn't have to be the Lamborghini of
Hmm.
insurance. We don't want it to be the Pinto either, but we want to try to keep their insurance costs down as much as possible to give them a fighting chance of success.
Right.
If you're paying through the nose for your insurance,
Hmm.
it's going to take you a lot longer to break that profitability point, whereas when you're keeping your insurance costs down especially in the beginning when you're in truck one and truck two and year one and year two of your insurance. Now, once you build out and grow and scale, that's when we begin to introduce some additional coverages and say, hey, yeah, maybe it makes sense for us to take a look at employee benefits, liability insurance, or employee practices insurance, liability insurance, crime coverage, all those different additional types of coverages, and usually we'll begin to recommend those once somebody's been in business for a little bit, in order to round out those. Once you have the revenue and once you have employees and you kind of begin to grow and scale. So
Right,
yeah.
right. Well, speaking about startup and the different levels, I'm pretty sure a lot of people start the industry and they don't even know that they need to get insurance requirements. Like I think of the junk hauler who has insurance on his truck and he thinks he's good. Those guys have huge risks because if they get an incident and they get a claim as a business and they've got, I don't know, they've got a commercial claim. I mean, have you had to get people out of that situation, or had clients come to you that did have the wrong insurance coverage and you were like, all right, this is going to cost more, but you were operating illegally about 2 seconds
Yeah.
ago.
Yeah, so especially in junk removal, this comes up a lot because when you're in the act of loading or unloading, you're being covered under your commercial auto policy. So some guys will go out and they'll have a personal State Farm policy or just a policy on their personal insurance, and they think that they're covered.
Right.
And the reality is, it's the act of use. So the fact that they're operating in a business capacity, in a commercial capacity, um, uh, offering junk removal services or dumpster rental services, even if they're a sole proprietor, if they've got an operation where they're in business, the only right way to cover that risk exposure is through a commercial auto policy. Your personal auto insurance might respond to a small claim and it's not going to be a problem. But if you're in a bad accident and
Yeah.
that other person lawyers up and they start subpoenaing your records and find out what you were doing and the fact that you were leaving a client's house with a loaded vehicle or a loaded trailer, and all that comes out, that is going to be the excuse that your personal auto insurance uses to deny your claim.
Oh, wow.
So
Yeah.
they're going to figure that out and find that out. And if it's $1 million claim, you guarantee there are going to be lawyers involved. And that's where it's going to go wrong, because you can't cover, that's not the intended use for a personal auto policy. A
Right.
personal auto policy is to cover you to go to the store, to run your errands, to drive your kids to school, blah, blah, blah. So really, and when you think about junk removal, when you're in the act of loading or unloading, that's like 90% of your operations. You're going into somebody's house, you're taking the couches, you're hauling them out, you're clearing out their basement, you're hauling everything off. You might be dropping a small shed or sawzawing a hot tub or doing a demo in somebody's property. So we had a client once in Pittsburgh that they dropped a couch, they dragged the couch across the guts of the couch across the floor, scratched the floor, took the same couch, banged it into the door frame, damaged the door frame, dropped the same couch in the driveway, dragged it down the driveway, and $17,000 later, that was covered under their commercial auto, not their general liability. So some guys think, oh, well, I've got a general liability policy, so that's going to cover me in this risk exposure. But no, you're going to get the claim. It might or might not be covered, but the correct coverage is provided under the commercial auto policy. So if you're operating any type of LLC, if you got a name on a truck, if you're presenting yourself to the client as a business, you have to have commercial auto policy in order to cover that specific risk exposure.
Wow. Yeah, I didn't realize that's what it would be covered under. My thought was just that you need to have all those, and they each cover, like, the names kind of make sense, but I wouldn't guess that that'd be under the auto policy.
Yeah, a lot of people, a lot of insurance agents don't even know that. So, you talk to people about that and discuss it and where that cutoff line
Hmm.
it's very interesting. But in or on around the vehicle, that is all covered by the commercial auto. In the act of loading or unloading, that falls under the commercial auto.
That makes me think about how you have employees sometimes, and you also have contractors. Different industries have different uses of those. The contractors probably create another complexity to the insurance, right? Because contractors are supposed to have their own insurance for when they're working, right?
Yeah, definitely. Yeah. And anytime you're using contractors, you should always have a subcontractor agreement in place. And then should have a copy of their certificate of insurance listing you as additional insured on their policy in order to correctly protect yourself. You also have to disclose that information to your insurance company to make sure that they're charging the appropriate premium because, subcontractors are viewed differently and create different claim scenarios.
Oh yeah.
So anytime you're utilizing subcontractors, it's absolutely critical to have all the right documentation to secure that and share that with the insurance company at audit so that they're not charging you for that. And then if you're just 1099ing guys and they
Yeah.
really don't have their own insurance, you've got to properly insure yourself against that type of risk exposure because at the end of the day, you're going to be viewed as the employer
Right.
legally. So if you don't have workers' comp for that 1099 guy, and he really doesn't have his own insurance, and at a minimum, he should have a ghost policy where he's got a policy that covers himself, but he excludes himself from it. And then that way you're covered in the case that something happens because they're able to show that they have their own workers' comp coverage. And if they don't, then you've got to cover them under your workers' comp policy because that's where the coverage will actually come from if there is an incident.
Right, right. So I'm sure most of these guys don't have ghost policies. That seems I mean, it seems kind of obvious to you and me, but I'm sure most of them don't even know what that is. So, but the people that are 1099, let's say you do want to do the right thing and insure them, you've got to disclose them in the same way you disclose an employee to your insurance company, right? Because they
Right.
could be for wage purposes, they could be a 1099 because they make their own hours, they use their own equipment. That's possible. But they really are a subcontractor if they're doing that kind of stuff. Um, so how do you disclose them to your insurance company without basically making them into a W-2 employee? Because that's really the risk is that you're just misclassifying them completely.
Yeah, what one way to get it done would be to go to the individual. Each state has their own assigned risk pool.
Mm,
So inside of whether you're Florida or Texas or California, it doesn't matter. Every state has their own assigned risk pool. What that means is that anyone who's selling, any insurance company who's selling commercial workers' comp insurance in that state has to participate in the pool.
hmm
And you can go there for high risks scenarios that are difficult to insure or startups that are difficult to find coverage, and you can apply for a policy. And with workers' comp, you as the owner officer can always opt to exclude yourself out of comp.
hmm
So what
Right.
you would do is just buy a policy, list some nominal amount of part-time payroll that you're going to pay, either part-time drivers or part-time employees that you're hiring throughout the course of the year, and then to disclose what percentage of that would be independent contractors. If they really are independent contractors and they have their own coverage, then they're going to provide you with the certificates and they're going to get deducted off at audit
Mm,
at the end of the year because every workers' comp policy is It's kind of like doing your taxes. You estimated the payroll at the beginning of the year, then you true it up through an audit at the end of the year.
Right.
So when that audit occurs, that's your opportunity to come forth with those certificates of insurance and say, hey, this guy's insured under his own workers' comp policy. Here's an example of that. Here's the certificate of insurance, and then they get deducted off of the payroll. But all of the rest of the payroll then would qualify for the premium, and they would true it up. If you underestimate in the beginning, you might owe a little bit at the end. If you overestimate, you'll get money back. So
Right.
that's
Yeah. And it's hard to guess because you don't know if the year's going to go well. If the year goes really well, you're probably going to have more employees. And if it goes bad, you're not going to need as
and
many.
another thing you can always do too is those numbers are adjustable. So you can endorse midterm in the middle. If you're having a banger year and you're going to do, 350,000 in payroll instead of 250,000 in payroll, and you want to pay as you go
Mhm.
instead of owe all that money at the end, you can
Right.
always call your agent or, let your insurance carrier know that they need to adjust the payroll
Mhm.
upwards or downwards in order to account for that from a cash flow standpoint. Then you're not owing this huge dollar amount at the end and getting this, bill for insurance, and having to deal with it later.
Right. Well, that makes a lot of sense. So, in addition to knowing how to use the insurance policies that people have, like that, to either cut their costs or make sure they're covered right, we also talked about how you can source better insurance, so you just basically get the best deal out of the gate, regardless of if you manage it properly, right? So that I wanted to hit back on that about how you help clients, and maybe you have some stories where you took them out of a high insurance policy where they're overpaying and you put them into one that saved them money.
Yeah, definitely. Well, the risk characteristics of the individual company really play a major role in that, right? So if
Mm-hmm.
you're a startup, there might be only one or two options, versus once you've been in business for a year, and you've got an established loss history that then we can present to an underwriter, the amount of options then kind of open up and it expands. And then once you've been in business for actually 3 years, that is the big level where insurance companies go, okay, you've been established. So standard carriers will come out of the woodwork once you've got that established loss history, and really you hit that 3 year mark. So that's the critical one. And depending on if you're in the Midwest, like we have a ton of success writing companies in the Midwest. We just moved somebody in North Carolina. They were with Progressive. Progressive was raising them in a very large dollar amount. They had a problem with their workers' comp, and we were able to move them to a standard carrier where it was all covered under one roof. They were paying about 160,000, and our quote was 100,000.
Oh my gosh.
Um, we were substantially lower. It was all with one carrier, 12 equal installments, A plus rated, cert wise. It's piece of cake. So that was a huge win for us just last month.
Hmm.
And then we ended up, even in that scenario, we ended up last minute getting a workers' comp quote that was saved them an additional 10,000. So we got
Hmm.
it down even further to like 89, 90,000. And
Wow.
we did decide for the extra 10 or 11 grand to carve out the work comp and split that off, just because we were able to find a more competitive rate.
Right.
So whether it's I mean, definitely helping people get out of the assigned risk pool. So, from a work comp standpoint, if you're with the assigned risk pool, we have carrier options that there's just no way you should be with the assigned risk pool.
Hmm.
If it's due to claims or really horrific claims or claim frequency, then yeah, you probably have to be in the pool. But if it was just because you didn't have options when you were starting up and your local agent couldn't figure out who to get to and what carrier
Yeah.
to get to, that those we write all the time. So
Okay.
we're really competitive with that. And then it's just, finding the right fit, whether it's the telematics. Another wild thing that people don't really think about from a risk standpoint that can help is out-of-state driver's licenses.
Hmm.
So some of the carriers out there will charge anywhere from $1,000 to $4,000 for just having an out-of-state license. So I literally got a call yesterday from a guy down in Florida. He texted me, "Hey, can you add this driver?" Sent me the picture of the driver's license. Um, it was North Carolina license. I said, "Yeah, I can add them, but it's going to be 1 to 4,000." He goes, "Man, this is why you're my agent. Great, thank you. I'm going to send this guy to the DMV today. We're going to get him to switch his license over and figure out and look into it. And then as soon as we get him get that figured out, we'll get him added to the insurance." So you're literally avoiding that surcharge that if you just called your agent and they would just update the driver, add the driver, send it back, send the updated bill back to you, or they would just say, "Yep, it costs $3,000." But if you don't know the why and what goes behind all these different rating systems and carriers and insurance companies, then you don't have the opportunity to be able to save your client money in that scenario. So
Right.
that's a perfect example of where we see our knowledge and experience and expertise coming into play to save somebody money. Out of state driver's license, the overall average age of your drivers, and it can create surcharges for youthful drivers.
Hmm.
So that type of information we're trying to educate and coach people on so that they understand that hiring a 25-year-old driver versus a 35-year-old driver can have a significant difference and impact on your insurance costs. So if those two applicants are equal, otherwise you really want to hire the driver that isn't going to create that surcharge. So
Right.
so those are the types of things I think that we're consistently delivering on,
Hmm.
that you know the our competition isn't.
Yeah, that makes sense. Well, I did hear that the Florida DMV is a lot easier to work with. I mean, you said that he was able to go that day or the next day. In
Yeah.
most places, the DMV is like a nightmare, and you'd be like, oh, all right, I'll just pay the extra $1,000 because it's gonna take a while to get the driver's license updated.
And
Uh,
there are some states that where it takes months. You have to live there, show proof, provide,
mhm.
And you've got to be established for some time. So
Right.
that
Yeah, they're
does
not all
depend on
easy.
the state, but yeah, there are plenty of applications where we've seen it, you know, work to the advantage of the
Well,
client.
I was making that comparison about how bigger government means like more DMV. In Tampa when we were at that conference, I don't know why we were talking about that. And then whoever I was talking to was like, "Well, in Florida, our DMV is pretty good, so it's probably not a good comparison. Normally, more government is a lot more, slower, longer processes, but not when it comes to the DMV in Florida." So I don't know how it is where you are, but it's pretty bad here in North Carolina.
Yeah, Illinois is not too bad
Oh,
actually.
good.
So
Well,
yeah,
that's good. That's good. Yeah, here you have to make an appointment online, and that you can't even do that because everyone has already filled up the slots. So you end up being a walk-in. It takes you 4 hours just to get in an appointment. So,
yeah.
but also I wanted to recap what you said. So if a company has 3 years of experience and they have low claim rates, they really should. That's a good point to shop and see if they can get a discount on their insurance. If they're not able to get a discount, they probably aren't sourcing correctly.
No doubt about it. Yeah, you're the number of carriers and options that are available to you significantly increases when you hit that moment,
Mhm.
because if in the state that you're in, a standard carrier will write it, then you're able to get much more competitive rates, comprehensive products, where you're going to be able to add a lot of bells and whistles coverages for a fraction of the cost. And going back to that umbrella conversation that you had talked about earlier, umbrellas really have gone way up. We've seen them go way up in rate.
Hmm.
And in Illinois, we get $5 million requests for umbrella all the
Okay.
time.
Yeah.
And even 10 million. If you want to go change a light bulb at the Sears Tower, you have to have a $10 million umbrella. So
Wow.
there are certain markets where it's just way more litigious, and we're seeing also the the values of claims and severity of claims cracking into those umbrellas like we've never seen before due to increased medical costs. And when liability events do occur, they're much more expensive today than they were even 10 or 15 years ago, 20 years ago. So as you look at those dollar amounts having gone up, the costs for umbrellas have gone up significantly. Whereas back in the day, umbrella might be $1,000 or a couple grand.
Mhm.
Now they're minimum, 5 to 10 grand. If you want a $5 million umbrella, you're looking at 10 to 15,000, 20,000.
Right.
So those numbers have dramatically shifted over time with the increase of severity
Mhm.
in the cost of claims.
Yeah, so
So
the downside obviously is that it costs more, but the upside is that when things cost more money, it keeps competitors away. So if you can afford that five or $10,000 increase, then that means there's only so many people that can also afford that. And so you're not bidding on jobs or going after the same type of work that other companies are. So we
you're going to
found
qualify. You're going to qualify to be able to do a lot more work as a
right.
result of having all that
Hmm.
compliance with
Yep.
all of your certificate requests. So
Right.
when you can go in and work with some of the bigger, companies as a result of carrying that much coverage,
Mhm.
yeah, it's a game changer for sure.
It's a huge game
So
changer. We had this one instance where some contractor that was doing they had a big job, like a 2-year project where they're going around, they're actually raising houses because the land was sinking, and they sent out this huge proposal, and it was like really thick, like huge amount of documents, and one of the requirements was having 2 million insurance, which you mentioned 5 and 10, so those are even higher, but we already had the 2 million. So we're like, yep, no problem. We knew that if we filled that form out, we were going to be the only ones that would take the time to fill it out and have the insurance for it in our area, because the only other companies that had that level of insurance were the big companies, and they were not going to fill out that form. So I think we were the only bidders on the job, and we got it
and they're
2
probably
years worth of
not at
work.
your price point either, right?
Correct.
So yeah,
Yep.
you're able to deliver a much more competitive option
Hmm.
as a result of qualifying for those jobs.
Right,
So
precisely. That's exactly what you want. So, and I've seen that with a lot of our clients that are operating businesses when they're able to take work from the big companies, um, their price is better. They're also able to deliver better. Like everybody's happy about that, just as long as they can deliver. Because sometimes it's hard to actually deliver on commercial contracts because they have speedier requests or bigger needs. I did have more questions for you, but we are running low on time. I see behind you, you've got a whole bunch of like plaques. What are those
yeah,
things? Can you talk about
my
those a little bit?
that's my hardware. Yeah, those are just we consistently perform we with our insurance carrier and our preferred carriers, and so what that is it's just the years of performance where we've won either founders awards or commercial lines branch awards as a result of performing with the insurance companies. And the way that we're able to consistently do that is by placing our most preferred risks with the carriers that fit those risk characteristics of their clients, and
Hmm.
they're looking for people that understand and think the same way that we do as risk professionals. And so when we come across those people, we place them with our best carriers. And so over time, we, I think, outperform the marketplace as a result, and that helps us with our insurance companies to be able to earn trust and build a larger book of business. And it's a snowball effect. So it's been great with the relationships that we've had with our key companies. As a result of that, we have a great amount of trust built up with our underwriters, and they know and understand what we're trying to do and what we're delivering on. And we're consistently delivering quality risks to the insurance companies. So as a result of that, we win a lot of awards and
Nice.
and performance rewards over time. So
That's
that's
fantastic.
what that is.
Well, that's fantastic. Well, I'm
Our hard
glad to
work.
see that. So
Yeah,
you only get awards if things are going well. Um,
yeah.
so a bit about events. I met you down at the Tampa Bay event for the dumpster runners, which was great. That was really they really said that was the first official one. There was a bunch of other ones, but that's like the first real one for that event, and I'm looking forward to that one for future years. But what are some other ones you go to? Are you going to the Docket one in New Orleans? And
Yeah, we are. We're going to be at the Docket event in New Orleans. We're doing. We typically do the dumpster expo every year. We
Mhm.
do the junk expo every year. That's another big one. And then we'll do a couple of the franchise. We'll do also some of the smaller software kinds of companies. So we'll usually do around 4 to 6 of these events a year.
Mm.
And it's just great for us because we get to connect with so many customers. A
Yeah.
lot of our customers are at these events. And then also to be able to meet new people who are just getting started, or even if they've been established and they're just coming across us for the first time, being able to engage and potentially help them to save money and increase their coverage and make sure that they're insured correctly. So all those types of opportunities, really, we have a huge rate of success when we go and do these events with the few months following it, where we'll get 50 to 100 new customers as a result of attending these different events. So for us, those are great. Those are something that we'll continue to do. We've kind of always done it, and over the course of the last 5-10 years, we've done a lot of those.
Well,
So it's
that's
been
smart. I think that everyone in the industry should be going to something, like at least one conference per year, because there's so many changes and there's always things you can learn from either other companies or from people like yourself that have a specialty. But
they're
yeah,
they're amazing, and iron sharpens iron, right? So you're
right.
at these events and you're hearing things, and whether it's AI integration or whatever the next, when you're surrounding yourself with the other successful business owners, you're getting tips and tricks, whether that's specific to your business or not. For me, I'm running an insurance agency, but I go to these events and I will learn from these guys that are on the cutting edge of different, whether it's how they uh, handle their sales and marketing, or their software utilization, or what. And there's always something new. So even when I go, I'm listening to the speakers, I'm attending the demonstrations, and I'm taking back 2, 3, 4, 5 things. So if you can manage to go to one of these events, I highly recommend it, just because it allows you to work on your business rather than just working in your business. So many guys are working in their business, and when they're doing that, they're not developing themselves and their skills and building it and moving it forward. And that's what you really get from going to these types of events, is you get creative ideas and solutions to the other people who are dealing with the exact same problems that you're dealing with on a day-to-day basis, and you're able to take those home and implement just a couple things that can change the trajectory of your of your business. So
Right.
I highly recommend it to
Mhm.
any business owner out there.
Yeah, and sometimes you go with a specific problem you're trying to solve, like trying to figure out how to hire someone, or maybe you're struggling with your insurance, or in my world, people have a tax problem, an accounting problem. But there's a lot of also things that you don't even realize are an issue, and you hear how someone solved a problem, you're like, oh, I guess I have that problem too. That's been keeping me up at night, and I didn't even think about bringing that to the conference. So there's so much to learn. It's like a never-ending growth pattern. So,
Yeah.
oh.
Yeah, it's great.
Well, very good. Well, we talked about events, we talked about awards. You mentioned to me in Tampa that you developed this new process where you can do like a fast quote if you get certain information. That's probably not for everyone, but you've been streamlining your process. So can you tell me more about who that helps, if that's anyone in our world, the waste hauler world?
Yeah, we're really stepping our online capabilities up with API integration where our software, somebody's going to be able to go to our website, fill out our form, and then it's going to automatically take all that information and pre-fill all of our applications, supplemental applications, as well as the Accord applications, just automatically. So right now, we're getting that information. The software, insurance software, doesn't allow for third-party API, and a
Okay.
lot of companies don't allow that.
Yeah.
And so as a result of that inability, you have to have somebody key it in manually in order to create all that. So we're doing away with all that, and we're going to introduce this API software system where effectively people are just going to be able to fill out our online quote. We're going to go in, review it, and then we're going to be able to push one button, and it's automatically going to go out to the multiple different carriers in different states and just instantly. So our speed to quote ratio right now, that time is X amount of weeks, depending on how long and what coverages you're looking for and how long you're established. But it's a process, and that's so being able to be on the cutting edge of technology is a real focus for us and our organization because we want to be able to provide our value to as many people as possible. So
Right.
really creating a volume type of operation is our end goal. So we're super excited about some of the steps forward that we're taking with AI and this integration, this environment where we're going to be able to create quotes quickly. So
Well, that's
yeah,
good.
I'm super excited.
Well, that leads me to my last item, which is how do people work with you? How do they find you? Like, what's the best way to get a hold of you?
Yeah, definitely. So we have an online uh, intake form, which is at Wisdom Insurance. Let me get the exact website. I'll share that with you. This is where our intake form sits currently,
Can I
and
can I share
it's
it? Can I share it on the
yeah,
screen?
absolutely. It's Wisdom Insurance. Paperform.co.
So
So that there, Wisdom Insurance is our main website. But
okay,
the intake form you would have to click on here and basically get to. And the Wisdom Insurance paperform.co will take you directly to the quoting platform.
can you
So
say it again?
that's the Wisdom Insurance paperform.co.
Wisdom Insurance dot paper.
Paperform.co.
There we go. So
That
this is what
is
it looks
it.
like.
So that is exact. And then this will customize for your individual business as you're filling it out. So as you click forward there, it'll ask you commercial auto, general liability, workers' comp. So you can click all of those different things, and then you're only getting the applications on those items.
Ah,
And then as you fill out the form and describe your business, you're only getting the questions that pertain to your operation, your business. So you're not, that way it's more efficient. You don't have to answer a bunch of questions that don't matter. And we're asking all the carrier questions that we need in order to provide you with most competitive premiums. So that's the go-to spot. Of course, you can always reach us at our, contact info. My cell phone's 224-213-4648. My email's Toby at wisdominsurance.com. And then you can go to our general website. Eventually, that will just be a landing page for that intake form, I think. And then we also have junkremovalinsurance.com, which is another website that we
that's smart.
feed in.
Yeah, that's very smart. Excellent. Well, I'm going to encourage people to go to these websites. I'll link those in the comments, the ones that you mentioned here, so that people can get to them. And are you on Instagram or any of their social medias?
Yeah, we are. Instagram, Facebook. We participate in Facebook groups a lot, so that has been a great connection for us. Yeah, I'm bad with our social media. I should probably be more dialed into what those links are, but
that's okay. I just want to tag you in them when we
yeah.
post this. That's all. So great.
Yeah.
Well, unfortunately I do have to wrap up because I've got tax returns to get back to. So I'll end the podcast episode here. So thanks everybody. Have a good week.
Thanks so much for having me on. Really appreciate it. It was great talking to you today. And look forward to working with you long term.
Sounds good. Thanks, Toby.
Thanks so much for tuning into this episode of Waste to Wealth. Thanks so much for tuning into this episode of Waste to Wealth. Make sure you connect with us on social media and subscribe to the show.